Yo, what's up, people? Hope you're having a great day. I was just, for those of you who don't know, I'm a mortgage lender, and I was just analyzing the markets to figure out whether, I have a couple clients asking whether they should float their interest rate or go ahead and lock in now, if they're going lower, etc. So I figured I'd shoot a quick video to tell you kind of what's going on, number one, and number two, to tell you that if your mortgage lenders are out there telling you that rates are about to come down, why they're wrong and why you need to work with a new lender, aka me. Just a small plug there. However, I want to show you a little something. I know that this looks very foreign. I'm going to explain it, and it's going to be really, really easy to understand. So, historically, mortgage interest rates follow the 10-year treasury. It's always been pretty close. So, if the 10-year goes up, interest rates go up, like almost a direct correlation. 10-year goes down, mortgage rates go down. So, for example, today the 10-year is you see at 4.3. Well, in 2020, when rates were crazy low, the 10-year was at almost zero, like zero point 0.5. So usually there's about a 2 to 2.5 point spread between the 10-year and mortgage rates. That's something you could very, very easily track. You can go to cnbc.com or just about anywhere and type in US 10Y and add 2 to 2.5% to that, and that's going to be your mortgage interest rate most of the time, historically speaking. So here's the reason that interest rates are not coming down anytime soon. So anytime I'm analyzing the markets, and one of the things that I think a lot of loan officers need to do more of is they need to learn the markets. Doesn't mean I'm a day trader or anything like that, but I understand charts and I understand economics, understand the data and why things are happening, right? So regardless of what's going on in the world, the market typically has trends and cycles that it goes through. So currently, interest rates, we all want them to go down, but they won't. So I'm going to tell you why they're not going down anytime soon until something significant happens. We'll keep all the politics out of it, keep the election year piece out of it, because at the end of the day, the charts and the data never lies. Your feelings do and your emotions do. So here's why rates aren't coming down. So I want you to look at this here. So anytime you're analyzing any type of charting, you're going to look for trends in the market, right? So one of the things that you always look for is uptrends, right? So you take the higher highs and you take the lows, and typically, stocks or anything that can be charted, it trades in channels or ranges. Okay, so look at this uptrend right here. So we are currently in an uptrend on the 10-year, which means that mortgage interest rates are still in an uptrend. Okay, so about a few weeks ago when interest rates dropped from, 7.5% down to 6.5%, that was right there. Okay. So I knew at the time, whenever, we were in this range of the 7%, I knew right then that I wasn't locking clients in because we were at the top of that channel, and the likelihood of it going down was fairly high. So there's a saying in Wall Street that says, range bound is the rule, a breakout is the exception. So if this broke out to the low side, rates would significantly decrease and we would begin to start our downtrend. Okay. So right here is why recently I've been locking everything that comes into my pipeline almost immediately, because look at the times that we have tested this channel. Okay. Test, test, test. And it doesn't always touch the bottom of the channel, but you can see the upward trend. You can see that. And I'll show you the downward trend that we just went through not too long ago. But there's the upward trend, and it's trading in this channel, and it typically bounces off here and goes to here. So the other day, a few days ago here, you'll see that we had a significant decrease in rates. I mean, that was a really, really, really big drop, and it was pretty steady with no corrections. However, I knew that we were facing something around this area, and then there's something called a retest that you'll always look at, and this is not as important, but it tested here, and so I had my trend line there, and then when it got to right here, last week or so, or about a week and a half ago, when it got to this area, I was really watching that, and I was like on the trigger, ready to lock. However, I was hoping that it would close below it, and so you see that the wick of that candle broke below, but it didn't close. It didn't close below it. Okay. So you'll see it bounce right off of there, and we are probably going back up to that channel again. Okay. We're probably going back up to the top of this channel. The only saving grace that we might have is there's also something called a resistance level that we always look at. So that's that 5% on the 10-year. And typically those resistance levels have been tested numerous times. And you'll see that it's been tested quite a few times if you go back through here. It's been tested a few times and broke down. So that's something I'll be watching here pretty soon. But you can tell that we are in an uptrend in interest rates. And until something changes in that area, interest rates are going to continue to go up. So when we went from the really, really high, when we went from 2020 to, the 2018 level when we were selling 5% rates and went to 2020, I want you guys to look at this. This is the downtrend that we were in, okay? So all throughout here, you kind of knew that once we started this downtrend, you're like, okay, cool. So you float because you know that rates are coming down, coming down, coming down. It broke way below, but it stayed in this channel, and it continued to stay in this channel. And you'll see right here, like let's just say that the rest of that chart didn't exist. I would say that anytime it broke out of this channel, the downtrend is over, and we're going higher, right? So about at this time frame, this is when we broke out of that, okay? And at that point, there's not any really trend levels that have established yet. So one of the things I was looking for at that point was that 1% range on the 10-year. And you'll see right there, we tested it a few times. And once we broke above it, that is when the uptrend began. Okay. So that's when that uptrend began. And, I could go back and I could rechart all this stuff. And, technically you could put the line here. Something along those lines. And this is called a wedge. But anywho, at the end of the day, this is why if your mortgage lender is telling you that interest rates are going to be lower here really soon, until the charts say something different, that's just not true. Or until we have a significant event. One of the things that can drastically change, something like this would be if we went to war, or, an election cycle can have a factor on it as well. But at the end of the day, it doesn't matter what the Federal Reserve does. What matters more is these charts, because they never ever lie. Okay. So, you can see that when, we were kind of in this small toppy range right here. And once it broke down, so once it, like I would call that support right there where my mouse is. Once it broke below that, that's when okay, now it should start its downtrend. And that's when I started drawing this channel right here. So just thought I'd share that with you guys. Again, if you want to, you can most certainly track the 10-year on CNBC, or basically any website for that matter. But for now, we are looking at higher interest rates for longer until this chart says something different. So I'm going to try to do these, once every few weeks, just to kind of break it down and show you guys where we are. But at the end of the day, this is a very, very well established uptrend, and it's likely gonna stay here for a little while. I don't think we're gonna see significantly lower interest rates for quite some time. I think that there's just too much speculation in the market, and speculation is never good, as far as charting goes, because typically the charts will always tell the truth, especially if there's a lot of speculation in the market. So hope that helps. But for now, interest rates are staying higher. I was hoping for something really cool right here. We break down and really start to come down, but it just didn't hold. So hope you guys have a kick-ass day, and make sure to hit that subscribe button. Like I said, I'm going to try to do this a few times a month, and yeah, have a kick-ass day.